No, no, no. You do not need a reserve fund first. All these guys teaching you the first thing you need to do is save up a 6 month or 1 year reserve. They're out of their mind. So stick around. I'm going to explain why.
Want to make your money work harder? Enjoy another video with Adam Kahn, the rational investor, on stocks, real estate, and crypto. Subscribe now for your weekly dose of investment insights and hopefully learn a thing or two.
Hello, my YouTube friends, and happy Thursday. Sorry I've done such a poor job of getting out any videos and checking in. Just been a busy week and a real busy week of doing a whole lot of nothing. So, in today's video, I'm going to talk about why I don't think you need a reserve fund the way that they teach in most advisors and what they tell you to do. And it primarily stems around time in the market is better than timing the market. And what does that mean? The longer time horizon that you can put money to work and allow it to be in the markets, the better it's going to do. So if you start your life first working on a reserve fund, that's money that can't have time to season and invest and grow. Now, don't get me wrong, like, don't leave yourself with no money. And as always, this is not financial advice. We'll talk about that at the end. So don't leave yourself with no money so you can't pay your bills and if you have a small expense coming up that you can't deal with it. But the point is to leave 6 months income or 6 months ability to pay your bills in an account that's just sitting there in case something happens where you lose your job or something comes around that changes your life and you're just stuck. That's money not working for you. So don't you want to get it started as early and quickly as possible? You don't want to just leave a bunch of cash lying around if the thing that's terrible comes around and happens so that you don't feel stress about having to sell something if that thing happens. I'd rather be put in the position where I have to make a decision and possibly even sell something I don't really want to sell because it's gone down in value than not be invested in case something that shouldn't happens, right? I mean, if we have a job and we're doing a good job, there's no reason to expect to be fired. If you know you're unhappy at work and you're thinking about leaving and you don't have money around to be able to pay bills during that transition, that's a different story. But if you're secure at your job and things are going okay, why do you have to worry about an event that you don't expect to happen? On top of that, if you do get fired, what type of time frame do you think that comes along in? Do you really expect it to happen in a short amount of time? Or do you think maybe 5 or 10 years down the line, maybe something happens and you lose your job? Well, if it's 5 years of not being invested, just sitting on the sidelines in case something happens and you need that money, that's a long time frame to stay uninvested. Again, I don't want to see people make a poor decision, have no money in their account, and not be able to pay their bills. But if you make enough money to pay your bills and put away, why wouldn't you have just a month's worth of expenses or whatever it is to make you feel comfortable so that you don't stress that there's too little? And really, it depends on personality, which goes back to it's not investment advice because everybody's different. If I have more than a month's bills in my account, I might spend on something I don't need. And on the flip side, when I have a small amount in my checking account, I feel pressure that I can't spend and I should be trying to do something to make some money. And it pushes me to actually do better in some ways. And I don't want to reach into my savings or things that I've invested to put it back into my checking in order to live a longer amount of time and whatever else. Now, I'm perfectly comfortable if something happens and I need to sell something to pay some bills, that's okay too, which is why I say it's different for everybody. That's just me. But I know if I have less in my checking account, which is like my everyday when we need stuff, or the mortgage and the electric bill and things like that, the less I leave in that account, the less likely I am to go buy a watch or something that maybe I need or maybe I don't need or something along those lines. Now, if somebody's like me and they're comfortable not having a reserve account around for exactly these things, I think you tend to learn to invest conservatively, at least with a portion that you think you might need if something happens. So I always try to not just buy the craziest stocks that I think are going to get the best returns. I know I talk about the trading account and I know I put some trades on like that, But for the main set it and forget it account, there's a lot of things that are conservative in the account for exactly that reason, that if something comes up that's unexpected and I'm forced into a position where I have to sell something in order to pay bills for a while, that hopefully those things that I'm invested in that are a little bit more conservative don't have the same swings as some of the other ones that have a little bit higher of a beta and a little bit more volatility, where I'm hoping to get some growth. Sometimes I'll put in a dividend stocks or things like that. I still try to time it well, and I still try to buy ones I think are good value. And Target with their earnings this week, for those of you who are watching it, I still have the target and I'm not looking to make any changes. To be fair, I think they're actually priced pretty fairly for, they could be a turnaround stock and they could do exceptionally well. I think they're a little bit undervalued where they are, but they're out of favor. And to be fair, things have slowed the past year or so. And if that continues, that's obviously negative. They still make plenty of money to be able to pay the dividend, which is my most biggest concern. And they actually have room if they wanted to raise the dividend, even if things slow down a bit more, they're okay doing that. Now, maybe they underperform. Thing is, Target's been around a long time, and at some point, I really feel like there'll be some good news that comes out. You'll see things start to improve, and the stock price will represent that. In the meantime, there's some negative things in terms of how people feel about the company. They're out of favor. They're not cool. They were woke. They then weren't woke. They had protests. They closed down stores. Like, there's been a lot of negative around it. And I know from the comments on top of it, people have a negative view on the company, which is going to keep it depressed. Now, to me, when something's depressed, that means it's on sale, and that's where I'd like to buy it. But I also recognize the risk that it could continue and get worse. And it could become a Sears that could continue to get worse and go out of business. It's not what I think. It's not what I hope. I just try to be pretty fair about it, because when you watch some of these YouTubes and people tell you the things they tell you, just like me, they really have no idea. They're making the best guess they can, and hopefully they're honest about it. I don't like the ones that are overly negative, because in some ways I feel like, just like the media and the news, they know that's what sells and they try to push it to drive the views on the channel. And I get it. Like, everybody's got to do whatever. But what I hope is they actually believe what they say. They're giving their best judgment, and maybe they're wrong, maybe they're right. I'd like to think the same for me. I'm generally bullish the markets. I think the news is always scary. I think recently the pullback yesterday, to me, that seems like an opportunity to buy a little bit more. I'm cautious. I just think it's always good to save and put away. And if that means waiting on having a reserve fund, that gives that money a much longer time to grow over your life. That's why I don't think you really need one. And if I can convince somebody to put away and save and get in that habit and not have some excuse of, well, I'm trying to save for a rainy day fund or anything, I think it's a great habit for people to have, to save for the future. Because, like I've said in other videos, I'd rather have half of something than 100% of nothing. Like that's a saying people have. And I really mean it. I'd rather buy a stock and be wrong, or I don't know, a baseball card or whatever it is you guys like and think goes up in value over time. But I'd rather be wrong about that and see the value decrease and still have it and it still have some value, than have nothing of value to be able to use if I need to raise funds to pay my bills. Now, that being said, my advice to somebody if they were buying a house would be a little bit different. I would make sure, especially in the beginning, to have a nice bit of a fund around in case things come along. Again, like, if you have plenty of money but it's invested and you don't want to sell anything and you're not super concerned if the markets fall, I get it, and maybe you don't need that big a fund. I just say it because I'm sensitive to it, because I'm in the industry and I see too many people in my mind cut things a little too close to the vest, and I worry, like, what happens if you get in the house and there's an air conditioner that breaks early on that you just don't see coming. That being said, again, if you have the money put away and you have to sell something, I'd still rather see people be invested than just sitting on cash or not investing and buying things that they don't really need. Need and wants are different things. I heard somebody, I think it was Michael Bordenero, who I really like his videos, but he was going over some things that people shouldn't do. And one of the comments that he made that stuck in my head was like, pay interest on anything other than a mortgage. Well, in my mind, there's good debt and bad debt. And I'm not going to define it by a percentage or anything else. But if you think you can make more money by borrowing the money and paying the interest than you would do by not doing that, meaning you see an investment opportunity, and I mean starting a business or something that you really think is going to outperform the interest that you're paying, and you've done the analysis and you've done the math, not I'm borrowing to buy stocks or I'm borrowing to buy, this collectible or something like that, but something where an opportunity arises, there's a specific return on the investment that outperforms your borrowing rate. To me, that's good debt. Now you have to prepare for anything that goes wrong that you could see that could go wrong. Obviously, you can't plan for the things you don't know or you don't see. But if you have an opportunity that comes around, not lending your buddy Jimmy who's in trouble and just needs it, but a legitimate something that you see an opportunity to make money, and that's going to be more money than the interest you're paying, and you're disciplined about it, I don't really see anything wrong with taking on some debt to make more money than that debt will create. Just be real careful about it, which is why I try to phrase it the way I am. I'd hate to see somebody put themselves in a bad situation or think, well, Adam on YouTube said it was okay if I borrow a whole bunch of money because I thought I would make a ton of money selling these widgets for $1 gazillion. Yeah, that's not really what I'm saying. Which is why what I always say, this is not financial advice. And really, I mean it. Please don't listen to me. Don't listen to anybody else on YouTube. You need to do your own research, make your own financial decisions for what fits you in your life, and maybe even reach out to a financial advisor and get some professional advice on how to invest, what to invest, and what fits your goals. Because really, as much as I talk about this stuff, it's from my vantage point, my perspective. That doesn't mean the things that work for me really work for you. And places where I'm comfortable taking on risk, maybe somebody else isn't, or vice versa. You have to know your risk tolerance. You have to know your capacity for the things that you're doing. You have to be really honest with yourself because when the markets move and you think I'm willing to take a ton of risk and something goes against you, are you still comfortable with it, or do you know yourself to know that you're going to change your mind and make poor decisions? I do it. I don't want to be, misleading that I'm different or that I don't make the same poor decisions sometimes. But it's also why I have safety nets to stop me from myself. Like part of why I have the set it and forget it account set up the way it is because I know the companies I really want to just own and not play around with. And I also know if I put in an account that has online access or anything else, since I'm consistently watching, I may have some opinion one day and make a decision that really isn't the plan. So I've set it up in a way to stop myself from me, which is what everybody should do for themselves, where I don't have access and I can't do that. And I just leave it because I hope one day my son and my wife wake up and it's just plenty that they're totally comfortable. Like that gives me joy. That, like, part of why I do this, part of why I invest is knowing that I can help to make other people's lives. And I know it's selfishly my wife and my son, but that I make their lives a little bit easier. And that's my goal and my joy of doing this stuff. And I hope others can accomplish the same things, whether that's for themselves, their friends, their family, their wives, their parents, their husbands, like whoever it is. Like, I hope that everybody can get to a position where they can continue to save, they grow an account to a point where they really feel like it can help them. And that makes you guys feel good. I don't know. Whatever. I don't mean to be all sappy. As a side, if you guys like the content I do and you haven't checked out Ryan Williams or Russ from Dapper Dividends, those are two separate people, not the same ones. I'm not sure if Ryan's YouTube is just his name or if he calls it something else. I always forget. But both of them, they really do a great job. Both of them are really honest and straightforward. I like their videos. I like them. I like their content. So I find if you like mine, check them out as well. This is not like they had no idea I would say that or anything else. There's some others I really like. I've mentioned them before as well. One that's like Joseph Carlson. I think he does a great job, just different in my opinion. Ryan and Russ are much more personable. It doesn't feel like, a company, but whatever. Anyway, if you haven't checked them out, check them out. I really like their content. As always, if you haven't subscribed yet, please do me a favor, hit that subscribe button, smash the like button. Oh my God, I think I said it the way I meant to this time. I always screw that up. Terrible. Anyway, hit the like button, smash the like button, hit the subscribe button. Make some comments in the comment section. Have you guys bought anything recently? Have you lightened up on things? What are you seeing in the market? Do you, like me, do you still think it's going higher? I just think we could have a pullback still. Um, Really what I think is the bill with Trump. The markets always seem to get nervous when something takes time. They sell off all scary, like it's not going to go through, and then at the last minute the bill makes it, or we raise the debt ceiling or whatever it is, and the markets go right back to going higher. Which is why I say you try not to be emotional. Don't make any decisions like that. Pick the companies you love. If you want to do some research on them and see what you think is inexpensive and a good value right now, I do think that helps you outperform. Um, I think if you buy companies when it has bad news and in some ways ignore all the bad going around it, I mean, to be fair, United Health is fitting in that position. Sorry, I have more to talk about now that I started thinking about it. I don't know that the bottom's in yet. I'm still waiting to see how it plays out. And as long as, like, this will sound so stupid, as long as they don't get delisted, as long as they don't go on like a 5-year penalty of being able to do anything with Medicare, like they still make an awful lot of money. And depending on how this stuff plays out, it's super undervalued for the money they make. Now, they've got the thing with the trial going on. People love to hate them because they're United Health, and the guy was doing great by us because they cheat everybody. Now it comes out that the CEO leaves at the same time, that potentially there's a case that they were cheating Medicare. Like, all of that stuff is really bad and is going to put some weight on the stock. And if I miss it, I miss it. If it goes right back up, I'm okay with that. But I am waiting to see if it finally flushes out. That's the stuff I look for. And I think if you have a 10-year time horizon and you're buying United Healthcare now, you do have potential that it could go out of business, just like I talked about with Target. But if I can buy, when I talked to my brother about this, if I could buy 20 United Healthcares and take the chance, maybe somewhere between 0 and 5 of them are going to go out of business, but somewhere between 15 and 18 of them are going to do really well. And I would have gotten in at a great price because, they were a great company all along that had these terrible things going on. But, they've been around for X number of years. Once that stuff got passed and things went on, it happened to be really cheap because the news was so negative and the price of the stock goes with the news. That doesn't mean that they just are terrible forever. Nike's another one that I've talked about. The news has been terrible. To me, it looks like it finally flushed out. I'm wrong a lot. This may not have been the bottom, but it sure looks like there was enough negative news. They're beginning to talk about it less. They're still going to bounce around and scare out the people and make people sell at the lows. That's just what happens. But it looks pretty negative. And again, similar to United Health, that I don't think the bottoms are in yet. To me, if I had 20 Nikes, I think over the long run, if I stick with those for 10 or 20 years, I'm going to outperform even buying the things that I love the most, like Amazon and Google. I think getting things on sale over the long run really benefits. Now, if you can get so good to be able to sell them when they're overpriced too, even if you're early, that's a phenomenal way to outperform. There's no guarantee. This is not financial advice, like I said earlier, but that's my thought and what I'm looking for when I'm looking to play the stocks. Anyway, again, have a great day. I'm going to try to get back again sooner, but I've had a bunch going on, and it seems like each day flies by. I apologize again that I haven't been able to post. I'm going to try to get this out tonight, but I tend to just fall asleep on the couch towards the end of the day. Have a good one. Bye bye.